Good morning, everybody. Excuse me, and welcome to OptionPit.com, your home for options education and trading. If you want to trade options, you came to the right place. Look at that handsome guy, SPX short fly from Mark. Again, check out our blogs, our video blogs. Generally pretty useful observations on what's going on. Also, I believe soon you're going to click on our event page and you're going to discover our latest event, which will be fixing broken trades. And we're going to have a beginning boot camp coming up in January. Alrighty. Market. Well, is there a lot of reason for much to happen right now? No. We seem like we're in this kind of netherworld where earnings were, I'll just say, lackluster, not great, except for some of the big tech had blowout earnings. Most of the earnings cycle is pretty much over. We're getting into the holidays, and we still have a VIX at 15, and we have realized vol at 10%. We have 20-day volatility at 11%, and we have 30-day volatility at 12.5%. 60-day vol in the SPY, though, is 22%, meaning, right, there is still the hangover of what had gone in the past. Clearly, the market right now is not trading, at least most of the vol that I'm looking at near the money is not pricing what's happening right now. It's working on pricing the Fed, right? So all of our market gyrations have nothing to do with almost anything fundamental and everything to do whatever the next snippet is out of the Federal Reserve. Right? So when you see vol trading, VIX trading at a 15, and you see realized vol trading at a 10, right? Stocks are not pricing what is happening now. There's a huge disconnect between the two, which leaves the market vulnerable to, 1% swings up or down. That's the bottom line, right? If paper is pricing this, they're looking for some movement. Right now, so what are you going to get? You're going to get decaying options near term. You're not going to get a lot of trade. Like we've been looking at time spreads at Option Pit. I still think they're kind of the way to go. Interesting things happening. Big tech, still the powerhouse. We did look at Apple yesterday. Again, it's surprisingly weak, and the market looks surprisingly good, given how weak the largest market cap stock is. So without Apple, we would be flying right now, if you think about it like that. Apple might make an more interesting vol sale today. My new usual rule is you don't make the first vol sale. So yesterday we had a little drop off in Apple. Today we have a second one, and it might make an interesting trade for us. Okay, volatility starting to get a little higher. If we could see 30 vol in that NOV 20 cycle, that could get a little interesting. So we'll keep an eye on it today. Usually, I guess I heard yesterday was supply disruptions or something like that in their subcontractors or not as big orders. Usually that sends the stock down for a while, and then it proves out to be untrue. So as far as vol goes, market up, VIX up. Again, we're in a very sensitive period as far as you're pricing things that are happening in the future. You're going to start seeing some swings in volatility. That should lock up products like VXX, UVXY, XIV, things we follow. And it should also lock the vol futures up a little bit. Okay. So those are two big things. We have November VIX expiration next week. We're starting to run out of time. Note the disconnect, right? D's future is 1692. The 9-day vol is 14.5 for VXST. Probably still overpriced. Okay, but that's what it is. So I expect the vol products locking up. You're buying any option premium near the money, it's going to decay in your face. And the only real solution to that is time spreads. All right. So I think that's what we got. It's not exciting. The only real excitement looks like in big tech. big cap tech like Google, Amazon, they seem to be loving the cloud today and not liking Apple. And we'll take a look too at Disney as maybe a little play here going into the release of Star Wars. All right, everybody, you guys have a good day, and I will see you all in the chat a little later. Bye-bye.